But Matt, maybe for investors, they're looking for, or for people on the call who are looking for a little bit of insight into what we think exciting narratives are for 2025. What would you point them towards?
Yeah, so firstly, I would say stablecoins are going to be a huge narrative going forward. Now, the hard thing is it's hard to gain exposure to stablecoins, right? I guess the only exposure you can get is the underlying blockchains, which these stablecoin transactions are actually occurring on, since the revenue from these transactions go to underlying blockchains. But that's not really a pure play. But what exactly are stablecoins? They're just tokenized fiat currency put on the blockchain. And tokenized assets is something that we see going forward as being a huge narrative going into 2025 and 2026, as we see more traditional finance firms come on chain and see the operational efficiencies of using a blockchain as opposed to traditional finance methods for spending and acquiring stocks and bonds and so on. So real world assets slash tokenization is a sector we see that's going to have huge performance, and with that comes decentralized finance, because these tokenized assets, they will be used in decentralized finance. And so that's another huge sector we see going forward. And as time goes on, we've seen this layer one premium come down. And the layer one premium is essentially layer ones are valued at a higher market cap than the rest of the sectors, just because a lot of the transactions that happen on these layer ones, a lot of these revenues from these decentralized apps, they go to the underlying layer one. So we've seen that layer one premium, and we think we're likely going to see that, not as much as in previous cycles, but the premium will still be there. So those are some huge sectors that I would keep an eye on going forward. And just to top it off as like a kind of a way of potentially acquiring more alpha, we see artificial intelligence and DeepIn being two other sectors that are likely going to play out as time goes on. Now, these are higher risk sectors, way higher risk than decentralized finance, for example. But with the higher risk comes high reward. And as we've seen, the narrative of these has come down. These were two sectors that were huge at the end of 2024, beginning of 2025. And we've seen it come down. So this may be a good buy to dip opportunity going forward in those sectors.
Cool. Thanks a lot, Matt. And I think the last one and the final kind of reason why we're potentially not seeing the same type of season this time around is the fact that, yeah, ETPs and ETFs seem to be also locking away liquidity from the on-chain ecosystem. And you can see this also with the chart below, which is total value locked on-chain, has come actually down since the 2021 peak. While, of course, the value or Bitcoin itself has grown significantly. And a lot of this is due to the fact that we had a major launch at the start of last year with the ETFs in the US. And a lot of this means that capital is now locked into these vehicles. It's locked into these structures. Previously, for other investors who may be invested via centralized exchanges, for example, could easily then switch their Bitcoin into other assets. Now, due to the fact that they may be locked into these structures, makes it a little bit harder to rotate your assets across the crypto ecosystem.
And I think something else to add to that is during 2021, we saw the global interest rates basically at near zero. So people went on chain to get high, low risk yields. And with yields going down across the globe, with the Federal Reserve in the US looking to lower rates to about 3.5% by the end of the year, we're likely going to see that continue on and maybe go to a 2% terminal rate. And that will probably make more people go on chain looking for higher yield, and especially as we mentioned, as these various tokenized assets come on chain, like private credit, for example, that should drive more on chain usage going forward.